Hello guys, welcome to the channel. Happy Sunday. I hope you're all doing great. So it's that time of the week. It's the watch list. So to start off with, we have some nice pairs to look at. We've got quite a large watch list this week. Um, so we'll start out on the Australian yen, or Australian against the yen. So we can see on the daily, even the H4 here, that the trend is prevailing. I mean, no one can argue this. I think we should all be aware by now that the yen is very, very weak, um, and it's getting outperformed by essentially every major currency or every G10 currency. So it makes sense to go for longs. But why Australian against the yen specifically? Well, it's because the Australian dollar is very, very strong at the moment. It's one of the highest or one of the top performers of the G10. So essentially, we want to do what Forex is, or trade in Forex. So we want to trade the strongest against the weakest currency. So that's the aim with this one. The problem is, because we are looking to trade the strongest against the weakest, it's very difficult to find a solid entry. So rather than looking at the 4 hours, which is where I would normally go for my entries, I'm now on the H1. So for this one, I'll be using my my proprietary indicator, the Golden Gate. I won't go into that right now. If you want to check that, there's a link in the description. But essentially, we'll be using pivot points to get into this and using smaller time frame pullbacks to get into the overall trend. So all I would need to see is a pullback to basically anywhere. So whether it's back to the pivot point or S1, even S2 is fine. So there is a pretty decent level of support here that would be great to trade off that aligns with S1. Now, of course, pivot points change every day with the previous market price or market movements. So these pivot points will change on market open tomorrow. But this still remains a good level to target. So we could, again, this is depending on how the market opens and how it moves during Monday. We could just draw our fib, and this gives us a second entry. So we could be looking for a break and retest, or we could be looking for a pullback to this level of support. So they're the two options I currently have on the Australian yen. Now, I've been trying to get into this position for roughly a week and a half to 2 weeks now, with no luck. Every level that I mark up for a pullback is just invalidated. We steam past it. So that's not great. It's not fun to watch your entries on such a nice move just getting validated. So this week might be the week, but again, we could just completely steamroll. You can see here there was no pullback really. We came back down to this 50 moving average, but that's for me not really strong enough. I possibly could have got an entry around here, but obviously I guess I was away from the charts at this time, which is unfortunate, but that's the way it goes. So that's the plan for the Australian dollar against the yen. So next one is pound Australian. Now, if any of you watch my content, I've been streaming quite often on Trader Nick's channel, so I'm a frequent guest on there. Mainly 1 or 2 times a week, I'll show an appearance there. And on that stream, I've been saying over and over again that I am a perma bear on the pound. Now, I'm not going to go into that too much. I'm not going to go and dig into all the data for you. But if you look at the data for the pound and all the economic forecasts and things, it's not reflecting how bad the situation is in the UK at the moment. And if you guys know of another YouTube channel called Gary Stevens, he speaks a lot on this. He was an inequality analyst, or still is, and he's an ex-City trader, sorry. He does a lot of content on this type of thing, and I completely agree with what he's saying. And essentially, it's the point is that the pound is, or the economy in the UK is very, very bad. The living standards for the average person are just unacceptable, and I don't think the data is reflecting this yet. I don't think that this is common consensus yet. Because if you take into account who is actually analyzing these markets, who is it that's doing the forecasts and moving the money and making the large moves, it's multimillionaires, surrounded by multimillionaires in a big city, in big offices. They're not living day-to-day lives with regular people that are struggling. And there's a lot of people struggling. So again, this goes back to trading a weak currency against a strong currency, and we can already see there's a downtrend here. So don't get me wrong. I'm not saying that this is a short on the pound because of inequality and I'm holding this for a long time, because that would be a much more long-term play and I'm not ready to execute on that yet. However, that's a theory I have, and that's something that is giving me a bias in these markets. Now, the main driver for this position is the strong Australian that I've already mentioned. So if we just draw a fib from high to low, we can see that we've got this level here. Now, this isn't a super strong level, but again, if we just go back to the hourly time frame, this looks like quite a solid position to take. So we've got the moving averages to the downtrend, Fibonacci level, got a stutter there, and this fib level is a very minor level of sort of structure in these markets. You can see it's reacted slightly, but nothing too major. So yeah, I'm just waiting for this pullback to ideally sort of this pivot level here, and then a continuation to this downtrend with a target to the fib extension. So I think this is quite a no-brainer position for now. Obviously things could change, but yeah, at the moment of recording this, it seems like a very, very simple trade to take, really. Next position is wheat. Now, again, I've been speaking about wheat quite a lot. And essentially, you'll see this level I've got drawn up here. I've been wanting to short wheat since this level, and this was based on seasonality. So if you go and check something like Season AX, you'll see at this date, so the 7th of June, you will see that there is a strong bearish move that comes into the markets over the past 10 years with a 100% win rate. And you can see it happened again here. So the reason I didn't get into this trade is because the move happened before I expected. So you can see the downwards sort of trend began up here. This was almost a week and a bit before I expected it. So I missed a large majority of the move, and here was too late to get in my book. We also had this level of support that I was kind of waiting for some sort of reaction. We saw a bullish candle here, and I was thinking, okay, nice, we can get a bit of a pullback and allow an entry, but that didn't happen. So I'm still watching this in a bit of FOMO, not embarrassed to admit that, because, this huge move I was anticipating and I was waiting for, and I missed it. And that's completely my fault. I should have been more vigilant. But essentially, I'm just waiting for a pullback, and I don't know if we're going to get it. I don't know if I've missed this move now. But yeah, I'm just looking for a pullback to something like this. So again, that might not happen, and it likely won't happen, but it's still something I'm watching. So yeah, that's as simple as that gets, really. So the dollar against the NOK, this is a long-term position. I'm definitely not going to be taking this anytime soon. So I'll probably speak about this quite a lot coming up in the future. So essentially, this position is based on the NOK being very undervalued at the moment. So you can see against the dollar, it's risen quite significantly. And the forecasts are essentially from the bank reports saying that this is something that could start to come down in sort of the end of 2024 into 2025. So the catalyst for this would be Fed rate cuts. Now, the Fed is expected to cut rate, or the consensus for the Fed cuts is sort of September, November time. So again, end of 2024 into 2025. So this is when I would start looking to short. So I am looking for a break of this trend line, some sort of retest. I don't know, again, because we're talking in such the future, I don't know where this could happen. But this is just obviously a rudimentary idea for now. And then a potential target just down to these previous highs around here. Now, again, this is on the weekly chart, so this would be a very long-term trade. So I may scale down. This thesis will change in the coming future, so don't take this word for word. This is just a rough idea for now. I'm still working out this trade. I'm still conducting research and still planning it. So I'll obviously keep you guys updated with that one. Now, the next position is the pound Swiss. So you can see daily time frame, very bearish, having some nice pullbacks. So you can see we've got a lower high here, lower low, and we're now, looks like we could be forming a lower high. So again, we've got our fib from high to low. So looking for an entry here, price is at the 200. So for now, it looks quite textbook. It looks like we could look for an immediate short position, but I'm just not super happy with how price is moving at the moment. So I would wait until probably Tuesday and just let the markets relax after the weekend. I don't really like trading Mondays anyway. So I'd be happy to just wait an extra day and just see how price reacts at this level. Ideally, I want to see a very clean bearish candle here, and just confirm the momentum. And then that's when I would enter, hopefully, and catch this move to the downside. But again, it depends how the markets move on Tuesday. So, sorry, it depends how the markets move on Monday, and I will assess it on Tuesday. So here we have the Australian against the New Zealand, and I think this is probably one of the cleaner setups on the list for this week. So essentially, it couldn't be any more simple. We've formed a level of resistance here. We've broken out, and it looks like we've potentially formed our high here. So I've drawn the fib, and you can see this 61.8 level lines up really nicely with this level of previous resistance. And we would come back into retest and have a potential target back at the fib extension. And I think this is sort of a bread and butter position. You know, if you watch my content, you'll know that I love a break and retest. But we'll see. This market seems to have quite a lot of steam at the moment. I'm not sure if we have enough sellers at the moment to push this back. But yeah, we'll see. You can see I've set an alert, so we'll see if that one actually plays out or not. New Zealand dollar. Now this one is again quite simple. We're looking for, this previous high to low with the fib. Price has rejected this fib level really, really nicely. We've just had a cross of these moving averages. So essentially, depending on how London session goes tomorrow, I would be looking to execute this pretty soon, actually. If we can continue this bearish momentum, that would be really, really nice. Down to the fib extension actually lines up quite nicely with this level right here. However, again, this depending on how the markets are moving at this point, we may just extend it down a little bit somewhere along these lines. But yeah, we'll see. This one looks nice, so I'm happy to take this one. Pound CAD. Very simple. Again, I'm very bearish on the pound. That's my bias at the moment. We've had a cross of the moving averages. We've created a low, and we've broken out of this previous level of support here. So I'm just looking for a pullback into this golden zone, whether it's a 50% pullback or into the middle. That's fine. I don't really mind too much. In terms of stops, there's not really a clear place other than at these previous highs up here. So we would be having to take a more long-term position on this one if we wanted to get in. But I'm quite happy to do that. Next one is New Zealand Canadian, and you can see actually we've already had an entry signal by the golden gates right here, so that's nice. We can see very clear downtrend, so I would be quite happy to again get into a relatively immediate short. How we do have this level of support here, so essentially we could go in for a short-term position on the hourly and just take advantage of our short signal. Or we can wait for a long-term position and look for the break and retest down here, and then potentially take a short to this next level of support down here. And I think I'm more a fan of this one because I prefer swing trading over intraday trading. It just gives me more peace of mind. You don't have to sit and monitor things too much. However, I may take the short position here. And be very aggressive with the risk management. So it'll be a very tight stop, something like this. And we would just trail the stop down until we are stopped out, essentially. Looking for this initial move to break this support. And then in theory, we may get stopped out at this retest, and then we can enter again here for a long-term position. But of course, we don't know what will happen. That might not come into play. And that sounds a little too perfect to actually happen. Next thing is the US 30. Now, I'm very, very annoyed. I missed two entries here. I missed this initial touch, and I've missed this second one here. So this obviously is market close. So this reaction isn't necessarily a natural market reaction. This is likely just to be sort of the market close move. And we may get a gap on market open, which would be good. So I'm essentially just looking for one final pullback, and I'm not sure I expect this 0.5 level to be hit again. However, just some sort of pullback into this area would be fine for me. Stops are quite easy here because we've got these lows for the golden zone, so we could just have a stops around here and target back up to these highs around here. So yeah, this one seems quite simple. So I'm looking to take this essentially Monday, sort of London session, New York session would be fine. Now the next thing is gold. Gold to me looks okay. Now I'm very mixed on gold. I do see I am a bull on this market. Let me be very clear. I'm not looking to start selling gold. There is no economic or fundamental reason to be short on gold at the moment. The problem is I've been chopped up in this range. I've been very vocal about this, and I'm not ashamed to admit that this range, I probably took 6 trades during this whole range, and I think I ended up losing about 1%, just due to, you know, moving stops to break even, having some profit, and then having a couple of losses. Overall, made a net loss on this move. But I'm not a range trader, and this is essentially just a range. So what I'm looking for is for one more position, and this will be my last attempt on gold. Now, the reason I'm looking now is because we've come back down to this level, and this is a huge level of support by now. You can see this lines up really well with this 50% pullback from the previous low. We've obviously created a nice level of support, and it's just so strong. It's you know, bounce, 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 bounce. So it makes sense to start looking for long positions here. So stops would be below, very tight to this 0.618 level. Sorry guys, you might have heard notifications going off. I hope it's not too loud for you. So yeah, we do have this downtrend as well. So essentially, I am looking for a very simple move off this 50% level, break the previous high here, come back down to potentially test this trend line, or come back and just test these highs as a new support. And then we could potentially retest, break past the previous highs or the all-time highs, retest those again and continue off. But again, this is a daily chart, and this is very long-term thinking with just technical analysis, so it doesn't make, you know, it doesn't mean too much. And I'll show you some of the data in a moment, because I think that's the last asset, which it is. So what I'll do is I'll pull up the edge finder for you guys so we can take a look here. So this is the COT positioning by the CFTC. So you can see gold is actually the most longed asset at the moment. CHF is the weakest. And that reminds me actually, so this position I took live on stream, and I've been in this position for 10 days. So I took this on the 20th. It's now the 30th. So I've been sitting in drawdown essentially for 10 days, which isn't too much of a problem. Like I'm not bothered about sitting in drawdown too much. So COT data is against us actually, by the looks of it. So if we just take a look at the data for the New Zealand Swiss, you can see it's very, very bearish. Retail is long. Essentially, most of these things are in our favor. So I'm happy to follow this more on just the technicals look very nice, first of all. The edge finder agrees, and I'm very happy to take trades just off technicals if they are good enough. So the edge finder backed up this position, so I was happy to take it. But yeah, anyway, let's go back to the COT. So you can see the COT positioning is very clear. As I was saying, the AUD is very, very strong at the moment. The New Zealand is trailing behind. Obviously, they are essentially connected quite well. They're next to each other globally. So it makes sense. If you're long Australian, you could be long New Zealand as well, which obviously is contradictory to my New Zealand Swiss position, but that's fine. That's a risk I'm willing to be in. So gold, we can see, let me highlight gold. There we go. So 88% long gold. They have decreased shorts, decreased longs. So overall, net position is very long on gold. They seem to be decreasing short contracts more than long. So yeah, looks good actually. I'm very, very happy with the way this COT positioning looks. NASDAQ is very long as well. So maybe we'll start looking at NASDAQ longs, because if you know me, then you'll know that I only long the indices. I don't ever short them. because the overall trend of those markets is bullish, and I don't want to try and fight that. It's a lot more difficult to make money shorting indices than it is just longing them. So yeah, overall looks very, very nice. These are the assets on the Edge Finder at the moment. And as for news, we have got the yen manufacturing, ISM manufacturing on Monday for the dollar. We've got ECB speech, 8 p.m. on Monday. Yeah, I'm not going to read off all this, but you can see it. So we've got quite a busy news week, quite a lot of high impact news. So Monday, Tuesday, Wednesday, Thursday, and Friday, we're actually essentially every day this week we have high impact news. So just be very careful, guys, as you come into these markets this week. So yeah, don't forget, if you want to watch my strategy, like a full breakdown of my strategy, there's a completely free video. It's the first link in the description. You can watch that. There's no paywall. I don't want your email. You can watch it 100% for free. So go ahead and do that. Again, if you want to get access to my indicator, you can get access first link, one of the links in the description. So guys, I hope you all have a great week. I'll obviously be active in my Discord, and I'll be on Trading Extremes at some point this week. So feel free to connect with me there. You can also follow me on Twitter. Subscribe and like. I appreciate you guys. Have a great week. I'll see you soon.